I call this the one-handed economist because Harry Truman, economists are always, well, on one hand you get this, on the other hand you get this. Harry Truman's like, I just go find me a one-handed economist. So I'll do my best to try to decipher what's going on today. I got to talk about my products. My GPIV, that's my introductory product. It's up 1,000% in 2 years. Are there any subscribers out there? GPIV subscribers, yeah? Are you all happy with the picks? Okay, good. 1,000% in 2 years. It's a portfolio of 4. It's got 5 companies now. 2 of them were acquired over the past year. That's 30, 40% of the portfolio. Longcore was acquired. Longcore was here with me last year. Origin was one of my favorites. That got acquired by Triple Flag for its Silicon Merlin royalty, and they spun out a new Origin. So not only did you get the cash, you got the new shares in the new Origin. That thing's up like 400% since we owned it. All my golden portfolios are audited. I'm a CFA, MBA. These are true portfolios. This is a true track record. I use alpha verification to verify my performance. My golden portfolio, it's a royalty-based portfolio. It's up 265% over the past couple years. Royalties are the best way to play gold, to invest in gold. Why? Because they have, fixed costs. They trade dollars guaranteed to be worthless in the future for streams of gold in the future that are guaranteed to be worth more. They have limited management teams of 2 or 3 or 4 or 5 people, and they don't suffer from the margin compression that miners do. 3 acquisitions in 2 years for my golden portfolio. Golden portfolio has about 15 members, 20% of the portfolio. There's an ongoing trend in the royalty sector. All the smaller ones with good assets, they all get acquired. Origin, it's like a 493% return. EMX got acquired by Elemental, and then Sandstorm was acquired, and those were 3 big winners for me over the past couple years. GP10X is smaller explorers, developers, and miners in the trough of the Lassonde curve. That's done extremely well. It's outperformed the GDXJ, GDX. So that's had 6 acquisitions in the past 2 years. Longcore, Silvercrest, Mag, Probe, Caliber, Reunion. The Reunion acquisition, you got shares of G Mining, and if you held on to your G Mining shares, you'd be up 700% right now. I look for grade. I love high grade developers, explorers, and miners. Grade is basically the only thing that moves the revenue needle and drives profits. So stocks follow profits per share. I don't care whether it's a technology stock or a healthcare stock or a gold mining stock. Stocks follow profits or potential profits per share. I've been following Newmont. I don't necessarily recommend a lot of the majors, but I use Newmont as an example. Look at the free cash flow per share in blue, and take a look at the green line, the share price. The only thing that drives shares higher is driving earnings per share higher, and the stock price will follow. Now, where is Newmont now? Newmont was a favorite of mine back in early 2025. That green dot shows it was trading at like a 35–40% discount to fair value based off current profits, free cash flow. Like, it was an easy pick. Where is it now? It's at the red dot. It went from 35 to 125. It's up 300–400x. But looking deeper into this, I run a model. This shows the Newmont share price versus the gross profit per share, a regression between the two. So as you can see in 2025, it was extremely undervalued. It was over 40% undervalued. That was a layup. Newmont stock exploded from that point all the way to where it is now. Now, looking at Newmont right now, it's about 15% overvalued, but look at prior peaks in the bull markets. Where's my laser? Here. At about a 60% premium, 60% premium, close to 60% premium. We're not there yet. These bull markets end when there's a blow off top, and these things trade at a premium to their fair value. And that's what I think is going to happen over this next quarter. Newmont's gushing cash. Fourth quarter 2025 earnings, the gold price from fourth quarter to third quarter is up 20% quarter over quarter. This is the largest jump in the gold price that I've seen back for 20 years. These earnings are gonna blow everyone away. The generalists are gonna be forced to jump in to the sector, whether they like to or not, because these miners are gushing cash. Gross profit of $14 billion, $14.6 billion. But the thing is, all my models, they use the most recent production and the most recent all-in sustaining cost versus the current gold price. Because the market moves based off the current gold price, right? So modeled at the current gold price, which was $47.58 on Thursday when I did this presentation. Now it's close to $5,000. Look at the difference in gross profit per share. Using the current gold price, it's $16.63. If the gold price stays high, that's what they're going to be reporting in the first quarter of 2025. That's what the market isn't anticipating yet. The Newmonts, they're going to buy back $5 billion worth of debt. They're going to buy $3 billion worth of stock. They're going to pay out $1 billion worth of dividends. It's got a shareholder yield of like 7%, the 4 plus 2 plus 1. It's an amazing opportunity. And just the miners aren't pricing this in yet because I think people don't believe in the gold price. And at the top, everyone's going to be forced in and push these things to a premium. The golden anomaly still persists. I talk about the golden anomaly being able to buy NAV value at a discount. This is Montage. Montage is up 1,000% in 2 years. You look at the stock price, you go, it must be overvalued. It's not overvalued because if you model it off the current NAV, it's still trading at least a 50% discount to its fundamental value. And Montage is coming out with a new feasibility this upcoming quarter that is basically going to double their current NAV. So it's going to be increased. I don't know. The sky's the limit. The market's not pricing it in. These are the things that I like. It's the second trough of the sine curve, when the developer's building out where EV or market cap rises to match NAV on first production. Montage is going to be in production in 2027. It's got a very high probability of meeting expectations. And at that point, market cap should rise to match NAV, which is a lot higher. Now, Core's gross profit per share. This is why Core hasn't done well over the past 20 years, because their gross profit per share in the yellow line is the same as it was 20 years ago. That's why the stock hasn't done anything. And that white line, that's shares outstanding. That's dilution. That's why despite increased profits and increased production, their profits per share haven't moved because they keep issuing shares. But let me show you where we're at now. Look at this. Gross profit to EV. For years, for decades, Core's gross profit was bounced between 500 mil and zero. 500 mil and zero, 500 mil and zero. With the recent price of silver, I model this using silver equivalent, $4 billion. Like, it's off the charts. I haven't liked, Core, I haven't liked Hecla due to their dilution, due to their lack of profits, but this is a new regime that I'm trying to get my mind around. And then if you look at this gross profit to enterprise value regression, you start looking overvalued, overvalued, overvalued. The recent price of silver, applied to their production and all-in sustaining costs, Newmont drops to a 20% discount. Like, it's absolutely unbelievable. So, Core Mining could go higher at this point if the silver price stays high. Hecla's the same thing. Look at Hecla. Look at those earnings exploding, going from 500 mil to zero, 500 mil to zero, all the way up to $3 billion. Like, this is a new era. If the silver price stays high, these miners are just going to be gushing cash. Hecla's undervalued, went from overvalued back to undervalued. Look at the last times it was undervalued. Right there, bang. Right there, bang. Right there, bang. And now it's undervalued again. Grade is king. Peter McGaw's a friend of mine, world-famous geologist that founded Juanicipio and Mag Silver, and he showed me this paper by Archie Bell, the head of exploration at Noranda. This is why I follow grade, because the only thing that increases profits is grade. There's silver miners out there, they mine at 100 or 150 or 200 grams per ton, and on an underground basis, it costs about $250 per ton. These miners, they don't make any money, even at $50 silver. That's why I look for the 400 grams per ton and the 600 grams per ton. That was, Mag Silver and Les Chispis, and they got bought out. Why? Because they're extremely profitable, because they mine at extremely high grade. And I look for miners with high grade. Those are the kind. Another thing that I'm having trouble getting my mind around, you get Allied Nevada. You remember Allied Nevada with Highcroft. You remember Bear Creek with Karani. You remember Levon with Cordero. I've been following these companies for 20 years. These are assets that have never worked for 20 years. Now, with the higher price of silver, like, maybe they work. You know, Discovery Metals bought Levon. Levon is up a tremendous amount. Discovery's up a tremendous amount. Bear Creek was acquired by Highlander. Highlander Silver's done extremely well. You know, maybe Karani works at these silver prices. And then Highcroft has risen from the dead. Now, Highcroft, that spike right there, that was a silver squeeze. That was GameStop, that was Reddit, that was all the stuff where they jumped on board a Highcroft, and they jumped it up, they pushed the price up. And that marked the top back in 2011. And, you know, it's good to see these assets kind of move forward, but you got to be careful here because I've never seen these assets work. And honestly, when I see these assets start skyrocketing in value, I get a little worried. Like I said, be very careful. This is a silver versus gold regression. I model the silver price based off gold on a daily basis back to 1970. So I do a forecast price of silver, and I compare that to actual. And when it trades at a 60% or higher premium, it tends to be a top. 1980, 2011, right now. So, you know, I believe in math, data, probability, and statistics. Statistically, be careful. But on the other hand, being the two-handed economist that I am, we could be in a new era. You know, with all the Trump policies, with foreigners not buying US debt, this cycle is different than other cycles. Just be careful, take some profits here. This is gold volatility versus gold. Whenever gold volatility spikes up, it tends to be a peak in gold. You get a peak there, you get a peak there, peak there. This one's spiking up. Like, we could wake up on Monday and the volatility index could be, you know, at above 30, 40, 50. Previous times when the volatility pushes high, marked a top. Now, on the other hand, GLD shares. This measures the shares outstanding of the GLD ETF. It measures flows into the GLD ETF. It is still lower than what it was back in 2019, 376 mil versus 450 mil. And it peaked out there back in like 2011, 2012 at the prior peak of the gold market. Like, these ETFs, investors still don't believe in this sector yet. Like, they're not snapping up the GLD yet. We need GLD shares to, you know, rise up much higher to mark a, you know, longer term top. So I guess basically, I'm looking for a shorter term top, but I believe we're in a longer term bull market trend. SLV shares are not at all-time highs. You know, the silver squeeze back in 2021, the SLV shares spiked. We're not there yet. GDX shares. Look at the GDX shares. Like, the miners are up, what, 250% last year or something, and GLD shares dropped from 80 down to 60? Investors are not in the sector. We need, GDX shares are not, they're lower than they were, you know, a year or two ago. Investors are not coming into the sector yet. This GLD SPY market cap is at 0.0027%. At a peak in 2011, it was 0.007. It was 3x higher. Like, based off these metrics, gold and silver and investments into the sector have a long way to go. The gold monthly relative strength index is at levels. Now, levels we've seen in 1973, okay? Like, you know what happened in 1973? That was that dip right there. Right there. And gold traded off like 30, 40% and the miners got crushed. That's where I think we are. Longer term cycle, looking for a correction, but this next correction that we get, you better buy with both hands because we're going for a ride. Buffett indicator. This Buffett indicator, it measures the market cap of the Wilshire 5000 versus underlying US GDP. When this thing peaks out, it tends to mark a secular shift between overpriced growth companies and underpriced commodity companies, cyclical growth companies. If you look back at the other times that it peaked, it was 1970. What happened in 1970? Gold bottomed, went on a 10-year run. What happened in 2000? Gold bottomed, went on a 10-year run. We're at a peak right here. It hasn't even started turning down yet. I think we're at the beginning of the next cycle higher for a cyclical 10-year rotation. Like I said before, central banks, why it's different this time, central banks aren't coming back to U.S. debt. China's not buying U.S. debt. All the BRICS aren't buying U.S. debt. With all of Trump's policies scaring everyone away, they're not going to support our dollar. This has never happened before. Foreign central banks hold more gold than treasuries. This is a long-term trend. It's the end of the dollar. But it doesn't mean it's not going to be volatile along the way. The Genius Act, Tether. I was in Beaver Creek, and I'm friends with Fred Bell, the CEO of Elemental. Fred's like, you got to meet this guy. It was Juan Satori. He's one of the management of Tether. Juan told me, he goes, listen, we're buying 2 tons of gold per week. We are like one of the top, right behind China, the world's largest gold buyer. They're holding the gold in their vault in Switzerland for their digital Tether gold token. And they have Tether dollar. Tether dollar, 5% of their portfolio is they hold gold. But the thing is, the Tether dollar doesn't pay interest, right? That's why Tether makes so much money, because they collect all the interest off the 200 bill that they manage. Tether dollar is just a stable coin. But the thing is, crypto people, they don't want dollars. That's why crypto was invented. So when the Genius Act takes effect, I think later this year, within JP Morgan in the US and Chase, you're gonna be able to say, hey, you know, I want my assets in Tether dollar. When you go into Tether dollar, you're gonna end up right in Tether gold. Juan said Tether gold's gonna be bigger than Tether dollar. Like, it's outside the system. It's outside the LBMA, outside the COMEX. It's gonna be a major driver for gold. And my line is the combination of the world's greatest store of value for 1,000 years gold, combined with crypto's instant transferability and frictionless exchange makes the world's ultimate currency, right? Because people like to make fun of gold people. They're like, oh, how are you gonna use gold? You're gonna shave some off and pay for your transactions? It's like, no, I got Tether gold. I owe you $2.50. Here's 0.0018 of my Tether right there, instant. It's the game changer. And then lastly, this is, hey, wait a minute. It's just a tweet from one of the guys. It's, you know, the famous Germany, the value of 1 gold mark in paper marks, going from 100 up to whatever that number is, a million, billion, trillion. And it compares it to. And it's like, it looks alike, doesn't it? You know? But that ride, those 3-year ride in Germany to straight out devaluation, there was major volatility along the way. So I guess what I'm saying is short term, take some profits, get ready for a dip. When we get that dip, you know, over the next few months, load up. And it could take a year, it could take 2 years, but load up because this storm has only just started.